Today on Forbes, how Victoria's Secret's Les Wexner made $2 billion in 3 months from AI giant CoreWeave. 5 years ago, Ohio's most revered entrepreneur, Les Wexner, stepped down as chairman of L Brands and soon began to sell off his stake in Victoria's Secret's parent company amid controversy over his close relationship with convicted sex offender Jeffrey Epstein. Many believed that Wexner, then age 82, would quietly retire to his 340-acre estate in New Albany, Ohio. Instead, the fashion mogul has more than doubled his fortune, thanks in large part to some savvy bets in a different industry, technology. Over just the past 3 months, the mogul's net worth, which includes assets held in his children's and wife Abigail's names, has soared to $10.1 billion from $7.9 billion, according to Forbes' estimates. The biggest driver of this increase is a 4% stake in CoreWeave, one of the buzziest artificial intelligence companies around. On July 7th, CoreWeave announced it is buying crypto miner Core Scientific in a roughly $9 billion all-stock deal. CoreWeave's market capitalization has almost tripled since its March IPO to nearly $73 billion today, and Wexner's stake is now worth $2.8 billion. Forbes previously reported on how Wexner scored his stake in CoreWeave, which was founded in Livingston, New Jersey in 2017. Thanks to a smart investment by Wexner's money manager at the time, a trust established for the benefit of his 4 children, Sarah, Hannah, David, and Harry, apparently invested $1 million in CoreWeave in 2019. It put in another $600,000 in the startup's Series A funding round in 2021. Wexner's CoreWeave shares were already worth $730 million when the company went public in March. The 8-year-old CoreWeave helps companies build data centers and loans out cloud access to much sought-after graphics processing units, or GPUs, which firms like Microsoft, IBM, and Meta pay to use to build AI models. With no shortage of customers, the company recorded $982 million in revenue during the first quarter of this year, a 420% increase versus the same quarter last year. However, it's yet to turn a profit and reported a net loss of $315 million during the same period. Nonetheless, CoreWeave's valuation continues to shoot up, minting 3 fortunes for its largest shareholders, though they can't cash out until the IPO lockup period ends in September. Its success has produced at least 4 new billionaires, including CoreWeave's 3 co-founders, Michael and Trader, whose estimated net worth is $9.9 billion, Brian Venturo, whose estimated net worth is $6.1 billion, and Brannon McBee, whose estimated net worth is $4.5 billion. Early investor and board member Jack Cogan is also a new billionaire, worth an estimated $3.5 billion. Forbes discovered the Wexner family's stake in CoreWeave in a lawsuit filed by the wealth management firm Florence Capital Advisors in the United States District Court in the Southern District of New York in May 2024. In the lawsuit, Florence Capital Advisors claimed they were owed a nearly $7 million fee for advising Wexner's family trust to invest in CoreWeave in its very early days. A representative for the trust responded in a counterclaim that accused the wealth manager of, quote, fraudulent conduct and, quote, multiple breaches of fiduciary duty. The case is still ongoing. A representative for Wexner did not respond to Forbes' request for comment for this story, while Florence Capital founder and CEO Greg Hirsch declined to comment due to the ongoing litigation. Wexner and his family, who are estimated to have pocketed more than $2 billion after tax from selling their L Brands shares between 2020 and 2021, likely have other startup investments we don't know about. Outside of their stake in CoreWeave, the Wexners own a New Albany-based real estate development firm with an estimated $950 million worth of land across central Ohio, an estimated $1.4 billion art collection, a nearly 300-foot yacht, a Ferrari collection, and a roughly $300 million portfolio of luxury homes around the world. For full coverage, check out Jemima McAvoy's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.